BNY is an absolute monster in finance. They're managing $57.8 trillion worth of client assets, and they're charging into crypto like there's no tomorrow. What really gets me is this. You've got a bank that's been doing business for over 240 years, literally one of the most traditional financial institutions on the planet. And they're suddenly jumping into a system where transactions fly around the globe as quick as sending an email, and it costs practically nothing. This isn't some distant possibility anymore. Nobody's sitting in boardrooms scratching their heads wondering if crypto might be a thing someday. Nobody's debating whether big banks will ever touch this stuff. It's already in motion. Every heavyweight in finance spent the past year basically putting their cards on the table. This is where money is going, and we're getting ready. You've got Citi making moves, JP Morgan making moves, Bank of America making moves, BNY making moves. The dominoes are falling. Now, let me tell you why BNY specifically caught my attention. They just came out saying stablecoins and tokenized RWAs could balloon to $3.6 trillion by 2030. And between you and me, that feels low. But even their careful estimate shows just how fired up these institutional giants are getting. And it's proving that mainstream adoption isn't just coming, it's about to go parabolic. Check out what Hunter Horsley said. He runs Bitwise as CEO, and his reaction was perfect. He wrote, "Watch this. This is the CEO of Bank of New York Mellon, the oldest bank in America, the largest custody bank in the world, one of the most widely used service providers in TradFi. Hard to imagine a simpler, clearer indication crypto is going mainstream. It's underway now. Buckle up." Quick reality check though. Crypto exchanges, not safe. Size doesn't protect you either. Bybit sits at number 4 for trading volume globally, and they still got hammered in February with one of history's biggest crypto hacks. $1.4 billion vanished. Pull up the list of top 10 crypto hacks ever, and you'll see a pattern. The majority happened at these supposedly secure major platforms. Anyway, here's the BNY CEO dropping this line. Tokenization is a mega trend. Take a listen.
Can you go into digital assets and sort of this trend toward tokenization and how that plays into the business model a bit?
Yeah, sure, Carl. It's a really important trend. It's one of the mega trends. We identified a series of mega trends about a year ago, and we said we want to position our business, invest in those capabilities that will allow us to benefit from those mega trends. Because while we want to drive and are driving organic growth, we also want to make sure that we're attaching ourselves to these big market cycles, and digital assets is one of them. Now, that's not just stable coins, it's also tokenization, and it really is across the ecosystem. So we've been investing around the ecosystem for using our traditional assets and then evolving our traditional business assets to be able to be on-chain as well.
Here's the thing that should make your jaw drop. We're getting validation from the bank that's been around longer than any other in America, and they're absolutely massive. We're not listening to some random YouTuber with a Discord server telling us the future, people. That's the key difference here. I'm not going to waste time debating whether you believe me or not, but check this out. The person saying this runs BNY, $57.8 trillion in assets. Literally the first bank ever established in the United States. These are the people who handle the backbone of Wall Street's daily operations. And they're coming out publicly saying tokenization is reshaping everything and the entire financial system is moving on chain. But wait, it gets absolutely insane. BNY isn't sitting on the sidelines just making predictions. They're actively building in this space right now. Take what happened on November 13th. They rolled out their new BNY Dreyfus Stablecoin Reserves Fund, an innovative money market fund designed for U.S. stablecoin issuers under the Genius Act. This product is designed to deliver 24/7 liquidity, stability, and regulatory alignment, pioneering new frontiers in digital cash reserves. Okay, so here's my take on this whole thing. If we're zeroing in on US stablecoin issuers, I'm willing to bet Ripple's name is absolutely on that list. And look, the proof's already there because Ripple selected BNY as the reserves custodian for RLUSD back in July of this year. This is an enterprise-grade stablecoin built for real-world utility, One of the largest and most trusted financial service companies in the world is now supporting this. I'm calling it right now. RLUSD has got to be included in whatever's coming. Why wouldn't it be? You've got a stable coin that's playing by all the rules, backed by real assets, no smoke and mirrors. And hey, BNY is not some random player. They're literally the custodian keeping RLUSD's reserves safe. Now here's where things get spicy. November 10th hits and BNY's Chief Product and Innovation Officer comes out swinging with this statement. BNY, we're building the future of finance today as digital assets and real-time transactions redefine how institutions operate. We are empowering clients to capitalize on new opportunities that can help drive their business forward. But they didn't stop there. They added this bombshell. Global capital markets are at an inflection point today, with clients looking to move money faster 24/7. I wanted to help shape this historic moment at a company with deep expertise across so many areas that are fundamental to market infrastructure globally. Guys, this isn't theory anymore. It's reality knocking at the door. These giant financial titans, the ones who've been around since your great-grandparents were kids, they're flat out announcing the new era. Non-stop availability, transfers that happen in seconds, costs so low they're almost negligible. The internet of value isn't coming. It's already here. But hold on, here's the juicy part. What's really cooking between Ripple and BNY behind closed doors? Are we only seeing the tip of the iceberg with RLUSD reserves? Actually, the answer is sitting right there in one of Ripple's latest acquisitions that we already dug into. G Treasury. So back on October 17th, Digital Asset Investor caught something interesting and shared it. It was BNY Mellon G Treasury Liquidity Direct. If you scroll down to the bottom section, boom, there's BNY's Liquidity Direct platform integrated right in. This diagram breaks down the entire workflow. I'm going to zoom in here so everything's crystal clear. Check out how G Treasury plugs into everything. So you've got G Treasury connecting through the efficiency workflow pipeline. Over in this section, there's the money market funds area where clients can set up and execute money market fund trades by using these investment templates that live inside G Treasury. Keep going and you'll spot the integrated payments feature built in. Plus, there's real-time transaction updates streaming through the system and integrated reports all bundled together. Now swing over to the right column where they explain how it works. Trade is placed through GT, G Treasury, using investment template. BNY receives trade instructions via template and invests in the investments for the amount specified from the template. And then G Treasury receives the trade confirmations. Your portfolio is updated and initiates settlements instructions to BNY for the investments and/or redemptions. That's how the whole machine runs with BNY Liquidity Direct anchoring everything at the base level. So you've got the external bank infrastructure, the settlement templates, all these moving parts. And here's what jumps out at me. This is another unmistakable tie between Ripple and BNY through this acquisition. This is precisely why I keep coming back to the same point. Ripple isn't making deals just to make deals. Every time they move, you need to be asking, who's really at the end of this chain? Who are they building a runway toward by picking up this company? Take that whole G Treasury situation with 13,000 banks already in their system. That wasn't luck. That was Ripple essentially saying, forget slow growth. We're taking a massive bite of the institutional world right now. They're not interested in knocking on doors one at a time. Here's the perfect example. Ripple could have spent the next 5-10 years trying to convince JP Morgan to work with them, or maybe chase after Citi, or camp outside Bank of America's headquarters. Pick your favorite mega bank and hope for the best, right? But no, they went after something like G Treasury that's already wired into 13,000 banks, acquired the entire thing, and suddenly they're connected to 13,000 banks overnight. The old school method? You'd be looking at multiple decades just to get that many banks to sign paperwork. This is what you've got to understand. Almost nothing Ripple touches is accidental. There's always a bigger picture. And if you look at recent activity around BNY and Securitize, the pattern gets even clearer. October 29th hits and we see this. Securitize launches tokenized AAA CLO fund with services provided by BNY, bringing institutional structured credit on-chain. BNY just pulled off another power move, and spoiler alert, tokenization is running the show here. They've partnered up with Securitize. Now, before you ask, yes, that's the very same Securitize from the September headline. Ripple and Securitize enable RLUSD smart contract functionality for BlackRock's BUIDL fund and VanEck's VBIL tokenized fund. Look, I'm calling it now. Every fund living on Securitize's platform is going to flip that RLUSD switch eventually. We're talking transaction processing, settlement operations, the complete package. Here's the thing though, this BNY web spreads way further. Flashback to August when BNY threw out this announcement. Same breaking, OpenEdenX selects BNY for investment management and custody services for its tokenized US Treasury bills fund, T-bill. The integration of OpenEden's tokenization platform with BNY's investment expertise and asset servicing capabilities marks a significant milestone in the evolution of RWAs and reinforcing our commitment to jointly support the end-to-end lifecycle of tokenized assets. Think that's the final chapter? Think again. What's tying OpenEden directly to Ripple? Here's your answer. OpenEden introduces tokenized US Treasury bills onto the XRP ledger. We're dealing with T-bills here, the identical T-bills now plugged straight into BNY's infrastructure. And listen to this, OpenEden isn't playing in the minor leagues. They've secured the bronze medal position on the entire RWA rankings connected to XRP, commanding more than $91 million in assets. You know what? Let me pull this up for you. OpenEden's T-bills are sitting right here, and they've actually crept up a touch this past week. Stretch that timeline to a full month, and boom, we're seeing about 8.78% growth. So yeah, things are moving in the right direction. You've got north of $122 million parked in this over the last 30 days alone. The asset value slipped down a hair, I won't sugarcoat that, but check this out. XRP is leading the pack when you look at token supply numbers. And these BNY ties, they're showing up left and right. Look, when you start connecting all these pieces, it's pretty tough to convince yourself that Ripple isn't deliberately paving highways to these institutional giants. What really grabs me here though, it's wrapping my head around just how absolutely huge tokenization is going to be. Let's zoom in on the XRP ledger for a second. There's about $380 million sitting there, practically brushing up against that $400 million mark in tokenized value. And that's barely the warm-up. Look at public networks overall, and you've got something like $18.4 billion in play. BNY steps up and calls tokenization a megatrend, which tracks with all these wild forecasts floating around. $18 trillion here, $16 trillion there, some analysts even throwing out $30 trillion. The BNY CEO himself, his number was $3.6 trillion by 2030, specifically for stablecoins and tokenized RWAs. That's just counting market cap, though. Doesn't even touch the question of actual on-chain activity. We'll have to watch how that unfolds. What's undeniable is this sharp climb in tokenized assets lately. Stablecoins are ballooning too. The monthly transfer numbers keep blowing past records. My bet? 5 years out in 2030, watching trillions flow through these networks won't even raise an eyebrow. It'll just be Tuesday. The growth curve is so steep that what seems massive today will feel routine tomorrow. Every heavyweight institution is piling in. That's the part you can't ignore. You've got these financial giants like BNY, JP Morgan, Citi, Bank of America, all making moves, right? And here's what blows my mind. Tokenization hasn't even warmed up yet. Stablecoins, we're still watching the opening scene unfold. Crypto as a whole, listen, I get it. People have been talking about it for well over a decade now. But here's my take. All that early action was basically just the tech nerds and brave souls passing coins around trying to time those crazy price pumps perfectly. Fast forward to today and it's a whole new world. The corporate heavyweights are finally walking through the door. They're not just watching anymore. They're building stuff, launching platforms, wiring themselves into these blockchain systems. That matters. Big time. Anyway, catch you in the next one.